Natural Capital Production Landscapes presentation for ASHEEP Beef delivered on the 5th of December 2024. Imagine a farm with plentiful water in the soil and landscape, additional diversified income and reduced risk. This could be you. Natural Capital Production Landscapes refer to large areas, regional scale, that integrate primary production with sustainable management of nature. Natural asset companies are companies that are based on natural capital and use natural capital accounting to define and describe their achievements. Our project looks at how can natural asset companies in production landscapes enable sustainable benefits from natural resources while creating positive and long-term benefits for both people and nature. It aims to understand WA grower perspectives in managing natural resources in agricultural systems and attitudes towards listing nature as an asset class. What are the barriers and what are the opportunities? We also look to understand investor interest in natural capital within a regional scale agricultural production system. Natural capital can be defined as the plants, animals, air, water, energy, soils and minerals that provide benefits to people and are used by industries, households and governments. Natural capital accounting is a mechanism to account for the value of natural assets, and it provides physical and economic measurements of stocks of natural capital and flows of ecosystem services. This aligns with the UN System of Environmental Economic Accounting, or SEEA. You can see the SEEA has accounts, a stock of natural assets which provide flows, ecosystem services which then provide value. The CICS is the Common International Classification of Ecosystem Services, and it's used by and will be used by the Australian Bureau of Statistics next year when it publishes its environmental economic set of accounts, which is very important for agriculture because 55% of Australia is used in primary production. So it's substantial in what will be presented and the influence that farming can have on those numbers that will be presented. Ecosystem services can be split further into provisioning services, food and water, regulating services, air quality and pollination, and cultural services, recreational and spiritual. The CICS framework will be used today to illustrate some examples about how livestock can be viewed within a systems context. The headline economic value of ecosystem services is huge. You have wide-ranging estimates, anything up to this number here or beyond, 2 times world GDP, and more than half of global GDP exposed to nature risk. I think that it's probably more likely to be towards 100, seeing that we're entirely dependent on nature to exist. So it's just worth noting how valuable the ecosystem services are to humanity. The provisioning ecosystem services you can split between 2 parts, which is important for this project: the biotic and the abiotic. The abiotic are freshwater resources such as rivers, minerals and metals, wind and solar energy. Biotic is food, crops, livestock, and things like biomass for biofuels. The important thing about abiotic is that we've found with our interviews with investors that they much prefer abiotic to biotic. For instance, the sun will rise at just past 5 o'clock and will set heading on towards 7:15 in the evening right now on the 5th of December. And it will be the same on the 5th of December 2035. There's an average of 8.8 hours currently where I'm presenting from in Perth, Fremantle, and today we've got an average of about 14 hours, over 14 hours of sunlight. So it's very predictable, and that's what investors like. Whereas growers are much more immersed in the biotic, the crops and the livestock, and carbon sequestration, which is much less predictable. What natural capital production landscapes does is to bring that all together in a way that provides the predictability and combines it with less predictable outcomes to be able to bring it together. And this is important because This can enable a new kind of equity, which is what we're researching as part of the project. You have natural capital plus agriculture equals reduced risk with diversified returns. So the natural capital production landscape equity hypothesis is a new kind of equity that provides sustainable, long-term capital growth, community benefits, innovation, employment, and short-term cash flow from multiple provisioning sources. And there's also benefits, of course, in regulating and cultural. So this formula is important to understand because it really highlights what we've found with our interviews that we've had with investors, and also the way that farmers and pastoralists look at things and landowners look at things is very much they're familiar with how this looks and how this works. The other important thing about natural capital accounting is data. So you need good data, and we've got an example here of the ASHEEP and beef area across Western Australia. This is a report from DPIRD, which was done about 10 years ago, showing salinity and how it rates on a scorecard. So it's very useful and important information for both running a farm business, but also from a potential investor's perspective, to provide objective, consistent data that can then be used in decision making for investment. The other type of organisations that provide these sort of natural capital reports currently are, an example is the CSIRO with its ecosystem account, state and transition, and they've done one recently for the West Australian wheat belt. And you can see here, this is data from 1988 through to the present day, showing the change in the landscape and the health of the land according to natural capital through those years. The other important thing about natural capital production landscape, when you look at it, is it has an opportunity for collaboration. Nature as an asset class in agriculture allows stakeholders, including grower groups, communities and investors, to participate in potentially having equity in sustainable growth by leveraging ecosystem services within these regional scales and regional landscapes. So you've got areas like energy, water, primary production, carbon and biodiversity, biodiscovery, soil, native vegetation and cultural and social benefits. So it's at scale, regional catchment, measurable, standardised and baseline, and that's what investors like. It's profitable and positive regarding cash flow, and it provides local community benefits, cultural and capital growth, with potentially aggregation able to be done through the whole is greater than the sum of its parts type story. So you can literally aggregate carbon and biodiversity credits as an asset within an equity structure. Some examples of this collaboration on a community scale are real. So there's a couple that are in train at the moment, are in play. So the renewable wind and solar farms on the Hay Plain in New South Wales will boost the economy and build sustainable farming. The example is that was led by the Hay Shire Council and working with the community to set goals for long-term benefits, including affordable energy for the whole town, which has been a deal that's been struck. Now the town is banding together, as you see these people around the table, considering what they could do to further their collaboration across more natural capital provisioning service and regulating services for the benefit of the community and for the production systems that are in the Hay area. So there's the role of community in natural capital production landscapes is very significant. And you can see that in the country of Denmark with the wind farms. They're often community-led projects and community-owned. So there's actually legislated to make sure that there's a percentage holding of any Denmark wind farm has a certain percentage that the community owns itself. So there's real equity that the people within the Denmark wind farm area have on the outcome of the use of that energy. So it's some examples for you showing that it is possible and is underway in areas around Australia and also overseas. So we need to consider, what does good look like? So just as the hay farmers have figured out that they're going to be significantly benefited by this renewable structure that will help to power the town of Hay and give them reimbursement for providing that power across their land, there's other things that you can do to think about what good could look like. So there's economic empowerment, sustainable agriculture, Environmental resilience, of course, so if you have strong natural capital systems, you're going to have more resilience against drought, for instance. There's social and cultural well-being, and global and economic impact will be that this sort of approach is attractive and will ensure that access to markets is going to open up in the future. There's also a shift in investment paradigms that's related to that. So you see more and more that investors are looking for biodiversity, and in any proposition that's put to them, they would expect that there's a natural capital aspect that takes good care of their investment area. So there's both a public good and a private benefit, which is important. When you look at natural capital production landscapes, depending on who you are, it presents different values. So, for instance, with the growers and the primary producers, natural capital represents an additional thing that provides them with options to be more resilient, to be able to use, and to be able to bolster their production systems and enhance them. With regards to investors, they're looking at natural capital and production landscapes as a way to enhance value, and as I've said, be able to reduce risk and provide diversified cash flows which enable them to provide a more consistent return on their investment. When you look at what good looks like for the investors, there's a number of things that have come through in the interviews. For instance, tangible outcomes. So investors really want to have something that's tangible, that is real. Some of them said that natural capital at this stage was just words. It's really not tangible enough for them. They want something more of a pilot that they can actually see it operating and how it works. The landscape scale measurement and baselining is important, and that's still in its infancy. Although, as I mentioned, there's a lot of government data that can be used and can be combined in to be able to generate these baselining of landscape scale measurements. There's challenges for standards data and measurements within natural capital itself, especially around the biota. It's actually often very difficult to measure, and you could argue that in fact it's non-fungible in many ways, and simply not fungible like you can with, say, carbon credits. It's not reductive in the way that you can manage nature. Growers are considered what are they going to get for buying in, and the credit that they will get for the contribution is something that the investors consider. Why would they, being the growers, want to be entering into this sort of arrangement for some sort of large-scale regional equity? And so that's something that they often consider as far as an important consideration for the very success of the project. There's varying attitudes to risk, so the investors, depending on who they are, will be much more risk adverse. Will be some of them, and others will be less so. So you have a range within that investor cohort, and that could be insurers, it could be investment banks, retail banks, venture capital, superannuation funds, and asset management, just to name some to present that all have different attitudes and criteria to risk. They prefer a project and program style approach, so they want milestones, deliverables, budgets, to be able to have a very strict scope and very narrowly defined scope to ensure the success of what they're investing in, and the actual outputs are expected and clearly defined. The investment vehicle, so there's a lot of discussion around whether a natural capital production landscape could be an equity, public equity or private equity, and there's other investment vehicles that could be used. Our project looks at the equity approach as potentially a publicly listed company, just to encourage discussion and research. The government policy certainty and consistency is very important to investors. So really the government, when you're looking at natural capital production landscapes, any project would last for many years, decades, and so the government policy needs to take that into account and be able to enable certainty and consistency for someone to invest in such a long-term project, because that's how nature works. Within the investor organisations themselves, they're often just coming up to speed with ESG, so there's an education, resourcing and capability with natural capital coming over the top. So there's quite a lot of learning that is being done on the investor side, and so they're really coming up to speed with what natural capital means to them. So the investor interest, a lack of what good looks like is an issue, so it's not tangible enough. Investors have at times intellectually justified why they don't invest, but they know they need to act because investors worldwide are increasingly recognising the urgent need to address the loss of natural capital as a systemic risk for their investment portfolios. They struggle to see what's tangible and able to be monetised. The objectives of the project, as I've mentioned, need to be clearly and narrowly defined. But given all these issues and the barriers that are being presented here, they still consider how could they possibly crash through this and make it happen. Production landscapes also have issues that they see around scale. Financially, it needs to be substantial enough to attract large-scale investment. So it's got to be, as a part of this project, is the focus on a regional scale, which is important. It's difficult to represent the complexity of natural systems in a financial product. So nature as an asset class sounds good, but it's difficult to define. It's fragmented, so often many different landowners and stakeholders in a primary production region will need to collaborate together. There's lack of consistent data and metrics across these natural capital projects, and it's difficult to compare and benchmark natural capital projects as a consequence of that. So collaboration is required across many different groups, including government and NGOs. But that being said, I listed a couple of examples, so it is possible, but it's got significant challenges and barriers that will need to be overcome. If you look at how you get there from here, you would be able to have a natural, or if you're going to proceed with a natural asset company, you look at identifying its natural assets and then work with the asset owners to identify sites with substantial ecosystem services and potential for restoration. You then have a constitution and corporation structure defined, which will be fair to all the stakeholders within it. So there will be accounting for local community as well as local landowners. So there's quite a complex structure to how a NAC is formed. And then finally, taking that to the capital markets to raise investment and funding and move towards a listing outcome for the shareholders. When you look at it from a primary production perspective, there's some real benefits about production landscapes on a regional scale that focus on natural capital. You've got water retention and hydration, temperature regulation, soil erosion reduction, biodiversity, which enhances resilience to pests and provides better pollination, for instance, and soil health, which is hugely important, improved fertility and better crop resilience. When I look at the ASHEEP and beef from a livestock perspective, there's a real need to be able to use renewable energy for things like desalination to be able to provide water on farm. And there's an example here, whilst it's not livestock, it's a cropping example, and this was able to recover using by a desalination plant 30 hectares of land to be able to recrop again. But you could apply the same principle to livestock grazing pastures. If they've become saline, you can look at this sort of approach using desalination. And the key to this is the cheap renewable energy that is becoming cheaper and cheaper all the time. So it's becoming a significant economic opportunity that needs to be considered to then provide these important environmental outcomes. A company like Plasmaleap is another example. If you have energy on farm, then you can do a lot of things with it. Plasmaleap is an example of fixing nitrogen out of the air using a technology that's over 100 years old but has been reconfigured and improved by Sydney University and then spun out into the Plasmaleap company. So this is looking at being able to provide fertilizer, so you get nitric acid and then you get potassium nitrate and calcium nitrate, as a byproduct, which you can then use in your fertilizer. You could even produce liquid ammonia and move towards some sort of fuels that you could provide on farm. So that once you have this ability to have cheap energy on farm, you can create a number of products that enhance your production systems, reduce your risk, and be able to enable more profitability in your operations. When you look at these sort of systems, a lot of people actually ask, well, what about the salt and the brine, the waste? And there are uses for that to also monetize. So you can turn concentrated brine into useful chemicals, and also you can make desalination, the process, more efficient. And there's also circular economy companies, local ones, for instance, Altec Batteries, which uses sodium chloride grid storage. So there's a lot of options there for even the waste product from the desalination process, using renewable power and provisioning services and energy from natural capital. When we look at livestock, it's important to consider it as a system. At the moment, there tends to be a focus on the emissions, so the enteric methane emissions is brought up consistently, and it's, I think, almost sometimes perceived as a huge problem that is a problem nonetheless. But what I'd like to show is that you can chip away at it, and also by considering within natural capital production landscapes how the animal works within the landscape, and what it does actually enables a different picture to form around how polluting the animal is and how much emissions it's making. And this example I've got here is from UC Davis, where the animal is actually, through grazing, able to then, through encouraging photosynthesis, to then sequester carbon back into the soil and the plants. So that's a good example of looking at it from a system, and what the animal does within that system is really important, not just this focus on enteric methane. So if we look at the CICES classifications, taking that as an example, and these are unverified numbers, but it's for example only, we've got livestock emissions adjusted, and that's certainly a huge number. But then what we're going to do is split it in a number of different ways to show how, through different ecosystem services, we can actually reduce that number down considerably. So I've mentioned soil carbon sequestration from grazing, so that is considered a regulating service that the animal provides. You also consider, if you take livestock off the farms, there's then a higher risk of fire emissions intensity, and so what they do effectively by grazing is reduce the fire emissions risk, and therefore can be considered as an offset. So we can include that in fire regulation within the regulating service. If you have the animal on pasture, you often have them eating lupins, which are nitrogen fixers, and also there's remnant vegetation for shelter and shelter belts, which are required, and they provide also sequestration of carbon. The other thing is that if you move away from livestock and go more into cropping, you'll actually increase the amount of nitrous oxide that you're emitting over an area. So this is this can be considered as an offset for avoided cropping. We can also look at adding things into the animal's diet, which are natural. So there's others, which I won't go into, but if we take just a natural one that's been used forever, grape pomace, red wine grapes in particular, are able to be used if you put into the animal feed. And sure, you won't be able to do every animal, but you could still, even with a reduced percentage of livestock that you can feed, it's still upwards of 15% reduction in the enteric methane emissions from the animal, and it's good nutritional food, so it makes perfect sense. So this is another approach that we can use to chip away at this emissions number. The native grasses, so there's a lot of work that UWA, for instance, and other universities are doing on the impact that native grasses has in reducing enteric methane. So this is once again a methane emissions mitigation characteristic of a ecosystem service. And you can also look at a big scale of implementation across areas where you, in these regional scale implementations, you have the ability for stacking of benefits together that actually have a synergistic effect. So it reduces erosion, it increases biodiversity and improves water retention. So you've got this big impact from rotational grazing, improvement of wetlands and silvopasture. So those are quite considerable if they're put in and implemented as a system. So once again, a systems view is what we're taking here to chip away at that emissions number. The other, another point that's worth mentioning that isn't a reduction in emissions, but is also another careful what you wish for if you remove livestock out of the system, is that currently they provide some considerable avoided health costs. So there's an important human health and well-being aspect to what the animal provides in the form of meat, B12, zinc, and all the benefits that come with the protein. If you're to reduce the protein and increase the carbs, then that's going to have significant impact on your society if you change the diet to that in that direction. So there's clear benefits of being part of what we're doing at the moment in a system, and including animals actually has significant health benefits, and so we're avoiding a whole lot of health costs as a consequence. So the net impact, you could perceive it as a carbon sink, if in our example, and obviously these numbers are unverified, but you get what I'm talking about here, which is to really consider the system, use natural capital production landscapes and these frameworks and methodologies to articulate the benefits of what you do as when you run livestock on your farm. And we can also have qualitative impacts on the system using this classification system again. So if you look at animal-based provisioning services, we would, if you took, as I mentioned, animals off, livestock off, and reduced it down, you're going to reduce your protein supply. Your impact on crop yields due to loss of pollination services will be significant. Loss of secondary income from livestock itself. There's a whole lot of things that go with that when you have livestock as far as income streams and material benefits. You have the negative impact of soil fertility metrics, so taking the animal off reduces a lot of fertilisation capability, and what the animal does is incredibly important as just grazing and what it does, and the eating of plants and bushes that are inedible for humans is another important factor. So they do a lot of things. The negative impact on grassland stability, so this is with well-managed livestock, you should be able to have better grassland stability. Historically, that might not have been the case in the rangelands, for instance, but now I think we're pretty well understood on stock levels, and very, very important, and I think graziers recognise what they need to do around that as far as the numbers for where they're operating. Increased CO2 emissions from wildfires. So if you basically take the animal off the land, you're going to have potentially more intense and bigger fires. Bushfires cover impact 14%, or 14% of bushfires are actually on farmland. So it's actually a significant emission that would be avoided if you continue to have animals on the farm. Loss of qualitative cultural value. So there's by taking the animals away, there's going to be an impact on society for the mental health and physical, experiential interactions. If you just have cropping, it's, for instance, it's much less engaging potentially with a lot of people, and so there's an important cultural, social aspect to being able to maintain livestock on land. Loss of biodiversity and carbon storage, of course. If you crop, you'll remove a lot of remnant vegetation, so that's going to cause issues with your biodiversity and your habitat. And finally, increased soil degradation. So if you're basically removing the animal and all that they do, and removing the shelter belts and the areas that they require to encourage biodiversity and carbon storage, then you'll have this soil degrading as well, which is a very significant issue. So you can see that the ecosystem services using the CICES classification cuts across provisioning, regulating and cultural in my example. And in conclusion, we can say, please complete the survey. I'll have the QR code at the end for you to scan, and it'd be absolutely wonderful if you could fill that in. It's 5 minutes of your time and invaluable to get your insights into what you think natural capital production landscapes mean to you. What we've covered today is natural capital accounting. It's comprehensive, so you can see I've taken a very comprehensive view, and it's important to understand that because it opens up a whole lot of opportunities. Obviously there's blockers, and we need to understand that, and that's why I'm encouraging you to fill in the survey to see what you find a bit dubious about this, or what issues or blockers you think this concept would have. And then we considered the production landscape scale, which is very important. Key points are natural capital in agriculture equals reduced risk and diversified revenue. Collaboration is key to achieving the best outcomes, and I had some real examples for you of that and the benefits that have been achieved by that collaboration on scale. Investors want regional, catchment scale, project-based, tangible outcomes, and the power of natural capital accounting systems using that lens, using something like the CICES framework, enables you to articulate the value of what livestock provides within an agricultural system. This is the last presentation for this year, and there will be 2 more in 2025. The project will then have a few more interviews, and obviously the survey that you're putting in will be important for the supply side as we see it, and then the investors will have their own survey. From that we'll be able to produce a couple of reports which you'll be able to look at and benefit from. So there's some important insights into building large-scale resilience and value to benefit grower groups, communities and investors, and creating a significant public good. So here is the survey. As I mentioned, it's 5 minutes for your time and is very valuable to us. Thank you very much.